Hello everyone, welcome to the video, and in this video I'm going to show you what an overextended stock looks like and what we mean by overextendedness, how Sakatas Homma describes his overextendedness, and also how what the yellow dot indicator, which basically how it works and how you can set it up as you wish, right? So first of all, what's an what is an overextended stock? So, uh, stocks move in a stage 2 uptrend or even a stage 4 downtrend in a staircase pattern, right? So, for example, if you take IRFC, this IRFC has been moving in a staircase pattern since it broke out from the primary base, go up, pull back, go up, pull back, go up, pull back, right? Go up, pull back, go up, pull back. And this sort of pattern is basically how stocks move in an uptrend. Now, any stock cannot go up forever and ever because nothing works like that. So at some point of time, it basically reverts back to its mean. So what is mean? Mean is basically the average stock price in the last X days. So most common moving averages which we use is 10 DMA, 20 or 50, and these are red, yellow, and green here, right? So things move up and then they sort of pull back to the mean, and that's what we call the mean reversion, and that happens in almost all stocks in the stage 2 uptrend as well. Now, this is a characteristics of most stocks. And basically the question then becomes, what is overextended is the price at which the probability of this pullback is higher and higher. At that point, we call it an overextended stock. Now, what is an overextended stock? It's not a single answer. So there is not a fixed answer to this, right? This depends from stock to stock. So low beta stock, which is mostly the large caps, they will not be very extended. Whereas small caps and mid caps and micro caps, which is the high beta stock, higher volatility stock, they might be extended more, right? So now we have to know key for you to then say a stock is extended, you have to first measure an extendedness. So how we measure extendedness is basically very simply, if you measure how far the price is from a key moving average, that basically is a measure of your excuse me, your extendedness. So for example, LIC right now, there are 4 moving averages here. One is the 10 DMA. So this was yesterday's calculation. So 10, and right now the stock today is 9% extended from the 10 DMA. The stock is right now 15% extended from the 20 DMA. The stock is around 27% extended from the 50 DMA, and somewhere here is the 200 DMA, which is 60% extended, right? So the question then becomes, is 9% extended, 15%, is this extended or overextended, right? So that's the question we are trying to tackle here, right? And like I said, the answer to this question is not a constant. It depends on stock to stock. In high beta stock, which is mostly the large caps, then the extension is a lower digit. Money, it could be that 15% is already a very high extension, and that you can call that stock an overextended stock. Whereas in things like Wari, for example, Wari right now is, Wari has come back, but at some point of time here, for example, it was like 38% extended from the 20 DMA, right? IRFC was at this point hugely extended from the 20 DMA, right? So another way for us, okay, so this overextendedness is also different for the same stock at the different conditions. So for example, let's say during this period of time, or if you just go even further, when when IRFC was during here, uh, the because this was a low volatility period and a basing period, and that's why the extendedness is very small here, whereas in a stage 2 stock, the extendedness can be a little higher, right? um, so during a different periods also the stock's extendedness can be different, right? Now another way to express this extendedness is to convert this distance of price away from a key moving average into a multiple of ATR, right? So for example, let's say let's get a IRCON example. So IRCON on this day was overextended, okay? So let's say what happened on this day. If we move next, right? So on this day, IRCON, the yellow dot appeared, indicator appeared, and this basically means that in my definition, it's an overextended stock. Now, why, right? So what I've measured is, if you see extension from 20 SMA. So my definition of extension is basically, if the extension, if the price, close price from 20 DMA, whatever that might be, in this case it's 35%, if this is more than 7x than the ATR. So ATR right now is about 5.6, right? So 7 into 5, 7 5 is a 35. So ATR, this is 10 ATR, but this extension is calculated at 14 ATR. So ATR 14 here is actually lesser than this, okay? So I'll quickly change that as well here. So 14 ATR. All right. So the 14 ATR in at this point is 4.96, and the extension is 38.9%, right? Um, so this is again 21 EMA. So now you divide 38% divide by 4.96, it comes to 7.85. So the moment, so the extension can be described as a multiple of ATR. And in my definition of an overextended stock, this is my personalized definition, because um, I basically trade micro caps, small caps, and mid caps, right? So my definition will be slightly different. So from my definition, and I haven't done a lot of metadata analysis, just from experiential learning and a lot of chart reading. If the extendedness is more than 7x the ATR, which in this case is, then the purple dot will appear, and it will show me that, hey, your stock is overextended, okay? Now how to use, so this is my Kelaway indicator, but even if you don't use that, you can use the yellow dot indicator, and I'll link this indicator on the article as well. So what you can do is, you can here change the settings accordingly how you want, right? So for example, Oliver Kell, for him, overextendedness is 140% above the this one, sorry, above the 200-day EMA, right? So you can basically say 200 and say EMA, and that would be like a different multiple of the stock, right? Also, for example, there is this trader called Jeff Sun on Twitter, and for him the overextendedness is 6x multiple of 50 SMA of the close price, right? So if you see this in according to that concept, at this point the stock was overextended. At this point also the stocks were overextended here as well. So you can change that accordingly to the stocks which you've traded, right? So if you see this at this point the stocks were overextended, the stocks already started to get extended here. So again, the same settings will not be useful for everyone, and that has to be changed according to the market conditions you are you are trading, the kind of stocks in that market you are trading, right? So 20 SMA 7x ATR is what I think suits me and my stocks. So I'll quickly show you examples in the stocks which I have traded myself, and these are all things which I hold, except IRFC, which I sold today. So if you had entered somewhere here, so this was the overextended condition. So again, I don't use it as a very solid signal key overextended. If it appears, then I will definitely sell, but it's just a cautionary indicator to say that, hey, this stuff is getting really extended now, so for example, all beta here, possibly you see BSC here was overextended, and then we had a pullback. And again, if you trade something which is a script which you trade every day, and then you can basically know that, hey, at this point of time, this um, uh, you can actually play around with the settings to see where exactly this script becomes overextended, because most of the stock will have a character, right? But you can also see that even after the overextended appears, things do move in stocks which are very. So for example, this probably is going to move in perfectly in this um, what is this ascending channel. So you can basically say, hey, how does 6x look like, you know does the yellow dot appear somewhere here when it is 6x? How about 5x? you know um, um, okay, so how about 4x? Oh, so this is a new stock, so that's why we don't have the data yet here. um, so in this case, again, similarly, so 4x already will give you overextendedness here, 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 and for a shorter swing, right? So but if you're a little bit of a long term swing trader, a long-term positional trader, so maybe 5x ATR or 6x ATR would be the number to go, right? So that's how you can set up your the yellow dot indicator for yourself. And yeah, that's the video. I thought this would be a little smaller one, but yeah, I hope this video was helpful. Cheers.